hand-wringing about the Magnificent Seven dominating the action here, our stock market's not the only one with a breadth problem. In fact, if we're talking about a narrowing of the market, Europe's got it much worse than we do, especially in recent months. Do you know that just 5 stocks accounted for 45% of the MSCI Europe index gains in January and February? Something that Citi's equity strategy team pointed out in a fantastic note that I loved and we passed around just last week. And I want to thank Dr. Beata Manthi for coming up with it. The analysts at Citi then went a step further, running a screen for Europe mega-cap stocks with similar characteristics to our Magnificent Seven. Think high margins, solid earnings growth, big economic moats. Although if you use that standard, it'd be the Magnificent Six at best because Tesla no longer makes the cut. We know the Magnificent Seven was actually the American remake of Seven Samurai. But now Citi says there's a European remake of our remake, and they call that the Super 7. Even better, the Super 7 are substantially cheaper than American's originals. And I got to tell you something, these analysts believe the group has a lot more room to play. Maybe you take some of these down because they're household names. I really like them. I'm going to walk you through them because Citi's Super 7 makes for a great list of companies, all of which trade over here, either on an exchange or as a fairly liquid over-the-counter names that you can buy through your normal brokerage account. Now, the leader of the Super 7 is probably pretty, let's just say, obvious. Novo Nordisk, the Danish pharmaceutical titan that came out with the original GLP-1 shot for diabetes and weight loss, Ozempic. They were years ahead of Cramer fave Eli Lilly on this one. Just yesterday, we found out the GLP-1 pill they're developing could be a lot more effective than the one Lilly's got in the pipeline. And today, the FDA expanded the label on Novo Nordisk drug to include helping prevent heart attacks. The insurers will think that's very good. Now, regular viewers know I still love Lilly. It's a huge position for my charitable trust. Member of the CNBC Investing Club, you'll know that. Because they put a lot of money into scaling up production, which is what really matters at this moment. Plus, I think the rest of the pipeline is very strong. But there's no denying the GLP-1 space will be a duopoly for quite some time. That's why I feel you can't go wrong with either of these stocks, because there's more room. There's really more than enough room for both of them. While Novo Nordisk is already up more than 28% year-to-date and 88% over the past 12 months, I'm betting it's got a lot more room to run. Next up, Citi calls out ASML. That's the massive Dutch semiconductor capital equipment maker. By the way, their equipment is the size of a bus, okay? A Citi bus. Now, this is another industry with only a handful of major players, an oligopoly with limited competition. But even here, ASML stands out for being basically unrivaled. These guys have an effective monopoly on some specific types of semiconductor equipment that are needed to make the most advanced chips. Even since the whole semiconductor complex bottomed late last year, this stock's been off to the races, up 76% from its lows last September, including a 31% gain since the beginning of the new year. By the way, when ASML reported in January, their net bookings came in at nearly 9.2 billion euros. You know, the analysts were only looking for a mere 3.57 billion? That's up 253% just since the previous quarter. That represents a staggering pickup in new orders. That's what Wall Street likes. Now, I want you to keep in mind the U.S. has tried to block the Chinese from getting ASML's best machines. Yet the company still crushed the numbers. The third member of the Europe Super 7 is a very exciting one for a lot of people out there. It's LVMH, which stands for Louis Vuitton, Moet, and Hennessy. Now, that's LMVH, okay? This is the largest agglomeration of luxury goods on earth, built by the world's richest man, who's Bernard Arnault, okay? They got extremely high-end apparel and jewelry. Think Louis Vuitton, Bulgari. Wow, that stuff's expensive. Dior, Fendi, Givenchy, Marc Jacobs, and Tiffany. If you're not into fashion, just know that Tiffany's arguably the most downscale name on that list. They've got some other great, terrific names. How about a champagne? Dom Perignon, Moet and Chandon. Now, Veuve Clicquot, which we served at our wedding. It's completely irrelevant. They own Sephora, too, if you want cosmetics. We did not have our wedding at Kohl's, which also features Sephora. The one thing LVMH's businesses have in common is that they're aimed at the rich. And it's a good strategy. When these guys reported in late January, they delivered a blowout quarter. The stock's been a phenomenal long-term performer. I bet it can keep winning, although you might want to wait for a pullback. Fourth, there's Richemont. Oh, boy, this is interesting. It's a Swiss luxury goods play, you know, as Cartier, Piaget watches, along with Chloe, Montblanc, Peter Millar for accessories, and even their own digital rental arm, Net-a-Porter. I thought that we actually owned that company from the boxes in our hallway. It turns out that it's owned by LVMH. When Richemont reported in January, not only was the quarter strong, they also had some very positive things to say about China. Impressive given that so few other American companies, or European companies for that matter, are thriving in the Chinese market. These guys clearly got something special going. Next member of the Super 7 is SAP. German enterprise software company regularly comes to the show. Last heard from them in July. It took SAP some time to adjust to the new world of the cloud, but they eventually got up to speed, and now they're making big money off artificial intelligence. Stocks up nearly 25% for the year, almost 150% from its lows less than a year and a half ago. It's probably not done. I should have caught it. I just decided to focus more on service now. Next, I was very happy to see Schneider Electric make Citi's Super 7 list. This is a French industrial that specializes in electric power products and digital automation. It kind of reminds me of Eaton, which we own for the trust. The other night, I told you that demand for electricity is growing rapidly for the first time in ages, thanks to all the energy-intensive data centers that you need for artificial intelligence. Schneider Electric is a great way to play that trend. Hey, get this. The stock's had a terrific move here, okay? Up more than 50% from its lows last October. Some analysts have downgraded Schneider in recent weeks on valuation grounds. But I'm a believer because people don't understand the scale of the current data center build-out or the broader AI-fueled upgrade cycle. Last week, Salesforce's Mark Benioff told me that Schneider's been using Einstein and sampling it and loving it and being big on it now. It's done to apparently great effect. Finally, the last member of the Citi Super 7 is a company that needs no introduction. It's Ferrari. Race. Stock's up more than 700% since it started trading in the New York Stock Exchange in 2015. I remember I got one of those red coats. My wife said, take that off. You look silly. Ferrari's just an excellent business. The demand for their sports cars is incredible, in part because they intentionally limit the supply, giving them insane pricing power. Unlike nearly every other automaker on Earth, they didn't pour money into EVs, a shrewd move, instead opting to invest in hybrid powertrains, which is what people want. That now accounts for roughly half of the cars they sell. That said, Ferrari does have a fully electric car in the works that they plan to unveil later this year. You even get some Formula One exposure with Ferrari, which has the longest-running team in the racing league. The long-term numbers here are excellent, too. And while I'm always pretty positive on this one, I wish I had pounded the table. That was my bad, too. Now, here's the rub. As great as the Super 7 may be, you're not exactly early to any of these stories. Most of these stocks are trading at or near their all-time highs. Of course, you could say the same thing about Magnificent 7, but it makes me a little queasy to recommend something that's already had a huge run. So here's the bottom line. I want you to think of the Super 7 as a shopping list of high-quality European stocks that could be very attractive on a pullback. A shopping list brought to you by Dr. Beata Manthi and her terrific team at Citi. Mad Money's back in for the break.
Coming up, metalheads, shine your bouillon. It's a 24-karat opportunity to make sense of the market. Cramer's going off the charts. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.